ESG is becoming a big topic for governments and companies alike. According to an MSCI 2021 Global Institutional Investor Survey, about 79% of investors in the Asia-Pacific increased ESG investments significantly or moderately in response to the coronavirus crisis. So what's driving this trend? Let's ask our next guest, who's also a member of CNBC's ESG Council. We're joined by Piyush Gupta, who is CEO of the DBS Group. Piyush, always great to see you. Welcome, and hope you're keeping safe. So to kick things off here, you know, we love to look at surveys here at CNBC, and I was just looking at another one, this one by Nuveen Asset Management, of 700 institutional investors globally. About a fifth of those people came from our neck of the woods, the Asia Pacific. And of those people, about more than a quarter, almost a third, said that or responded that ESG investing is a trend, but not a long-term strategy. Do you agree with that?
Sorry, Martin, I didn't get. The ESG investment is not a long-term strategy, but a what?
Is it a trend or is it a long-term strategy? Because the survey I was just talking about, more than a quarter, almost a third of people surveyed in the Asia-Pacific said, look, it's a fad, it's fashion, it's not long-term strategy. Are they right? Do you agree?
So, Martin, I guess I'll answer it at two levels. The first is quite clearly this. It is unclear to me whether ESG investments by themselves create superior returns. I think there's definitely a lot of correlation, but causality and causation is yet to be strictly proven. What does happen, however, is companies who tend to focus on ESG all tend to be high-performing companies. And therefore, if you were to create a basket of ESG stocks, you would typically pick up high-performing companies in any event. And that's not a bad investment profile to have. Second thing, though, is if we forget the fundamentals and think about technicals, the truth is that there is a tsunami of money being directed at ESG investments. And therefore, even if the fundamentals don't bear out, the supply-demand equation will bear out. If there's a lot of demand for anything, prices go up. And therefore, my advice to most people would be, you cannot do too badly being in a portfolio or a basket of ESG assets just because there's going to be $1 trillion more coming into that asset class. And if nothing else, that's going to take prices up.
Understood. We'll talk about the ESG investing in ESG type products in just a bit. But first, talk to us about how yourself and DBS is providing or trying to provide leadership in terms of being ESG compliant.
So, you know what we do, Martin, we've got a whole sustainability agenda that includes the first pillar of that is what we can do with our clients in the nature of our banking activities. The second is what we can do in our own business, our own carbon footprint and our various policies and so on. And the third is what we can do with community at large, social enterprises and companies who approach a dual bottom line. On the first of those pillars, we actually look at three things again. The first is how do we put our capital to work? Not just loans on our own books, but also capital raising in the capital markets for our clients. We look at industries we want to do more of because their business models are more carbon friendly, or companies who are already running lower carbon business models. But equally, we look at those industries and companies where we think the carbon use is inefficient, and we try to scale down our lending and our activity in the first instance. What we do most importantly, however, is we try to help companies transition from what I call brown to light green and to green. We have a transition finance taxonomy and framework. And so we work with companies to help them down a path so they can make their business model less carbon intensive. Like I said, we also do a lot of green bonds. We do social bonds. We've done all kinds of renewable, geothermal, sustainability linked activities and so on. So there's really capital raising. On the other end of the spectrum, we work with our investor clients. You just talked about it. Wealthy clients, private banking clients, institutional investors, to provide them a host of ESG-linked products that they can invest in. Today, 41% of all our investor clients are already investing in sustainable products. So creating an appropriate suite of products is important. I overheard the question you asked the finance minister a little while ago, and how do you make sure these products are indeed kosher? And I think the finance minister had it right. I mean, the measurements are not impeccable. There's a lot of uncertainty, and I think the world will take some time trying to get to a common understanding of what is really green. But we tend to follow the indices. So MSCI has an ESG index, and we say if you're triple B or better rated on that index, we will accept the fact that there's probably a good ESG investment. So we build a lot of products around things like that. We also build bespoke products of our own. And in the third category, we work with the retail clients. So we've got a green card, we've got a green auto loan, we do financial inclusion for people, migrant workers in Singapore. We're trying to do democratizing wealth for the Robin Hood class of customers to give them financial planning and retirement tools. So this is essentially to address the S of the ESG. And finally, you might have noticed a month ago we launched a carbon exchange. That's really a belief that all of these ESG strategies will also benefit from some infrastructure solutions. And so if we can participate in creating the right infrastructures, we might be able to get some good business as well.
Okay, I want you to talk to us about ESG investments or products in just a bit. But first, picking up on your last point, I'm excited to hear about, I want to hear more about the carbon exchange, which I know you're doing in collaboration with the SGX. Where are we? Where are you on this?
So we hope to be able to actually launch for physical trading by the end of the year. But the real genesis of this idea, Martin, goes back to the Emerging Stronger Task Force. Again, your question to the finance minister, where should Singapore be investing? We took a prism that sustainability is going to be a big industry. Apart from doing the right thing for the planet and for our own commitments, we think there's an opportunity to create jobs and economic activity. We reasoned that the climate change agenda, particularly the carbon economy, is going to be a place where we can do something. And then we figured that if you look at where the carbon complex is, if we can position Singapore as a major carbon hub, a hub for carbon services, that could be quite interesting for Singapore's future. As we went down that path, it became quite clear that one thing we could do quite nicely was to address this issue of helping people achieve their voluntary carbon commitments by creating a carbon exchange. One of the best places, best ways in which you want to be able to do achieve carbon credits is through the nature-based solutions. And about a third, at least, of nature-based solutions in the world come in our neck of the woods: Indonesia, China, even South India. One of the problems with all of these solutions is that they've not been trusted. The Kyoto Protocol in 1993 already posited the need for having a carbon credit policy. The market is not developed. A lot of people worry because it can sometimes be gray. We figured that's exactly where Singapore can play a role. We are trusted, we are clean, we have a great governance system, we've got a great legal system. And so we can put together an exchange which promises a high bar for carbon credits, a high bar of verification, a high bar for quality, a high bar for scientific validation. Then we could create an exchange where people can come to and get genuine carbon credits in a very meaningful way. So that's the idea.
Okay, looking forward to the carbon exchange getting up and running by the end of this year. I just hope there's enough demand as well as liquidity. Piyush, stay right there. Let's bring in our second panelist into this conversation. Li Yimei is the CEO of China Asset Management, also part of CNBC's ESG Council. She joins us live up in the Chinese capital, Beijing. Ms. Li, great to see you and appreciate your time. Let me pose to you the first question, which I posed to Piyush. And that is, there are still a number of people out there in finance who believe or think that ESG investing is just fashion. It's just a trend. It is not and should not be part of any institution's long-term strategy. Do you agree?
Well, absolutely not. On the contrary, we strongly believe that ESG investment is actually should be part of our investment philosophy as well. And it's not, well, some people do think this is a fashion or even a product theme, but for ChinaAMC, we think this is our corporate value. We think we need to invest for the longer success of this world, the human race, in order to maintain the longer, well, sustainability of our investment outcome. So what we define value, ESG play a very important part in this. So this is not just a flash for ChinaAMC or I think for the investment community. This should be the fundamental value of us going forward.
Yeah, and I understand that your shop, China Asset Management, is part of what's known as the PRI, which is very much trying to advance or push the agenda of ESG investing in China, where you are. But to Piyush's point, and this is something that everybody talks about all the time, there is not yet a global standard for trying to decide or decipher whether or not a financial product is ESG compliant or not, whether it's real, whether it's right. Just labeling and marketing, whether it actually lives up to the promise. So in that event, when you're trying to, let's say, push ESG products or sell them to your clients, what do you tell them and what are they asking you in terms of like proof?
Well, there could be two part of different client objectives. Part of the clients we are dealing with have international knowledge. And for example, we launched our first ESG Greater Fund Investment Fund in Europe, actually last year. And the audience and the clients bring in the money. Actually, they are very familiar with the international or the ESG concept in the developed world. So this is quite easy that what guideline we could follow because we are in partnership with NNIP and also a leading ESG expert in this area. But another part of the investors, they are not really familiar with the ESG concept, but they are familiar with sustainability. They are familiar with what's going to be important for the longer development of their, life or society. So, for example, we launched a product in energy renovation, even though it's not labeled as ESG product, but this is what we carry out our value as, cleaning the energy and renovate the energy sector, which I think also serve the whole purpose.
Okay, Piyush, when you,
Thank you, Martin. Maybe
please go ahead, come on in.
I was going to come in at that point. So I think Yimei is saying the right thing. So, when you think about ESG as a strategy, like I said, it's very hard short-term to show causality. But the minute you take a longer-term perspective and you figure that there is no question but that we as mankind have to rethink the fundamentals of our business models, otherwise the planet is at grave risk. That also means that we're going to have to invest vast sums of money in reconstructing for a more carbon-friendly and a more green business model. And when you start taking that long-term view, that this is where money will go, we're going to have to reconstruct, we're going to have to reinvest, then it starts making a lot of sense that you better start putting money to work in things which are sensible and are going to get long-term payback, even though the short-term line of sight and the short-term measures might not be that easily visible.
No, I couldn't agree more, Piyush. But back to the question I wanted to ask you, and that is when you engage with, talk to clients, customers, et cetera, and they're asking about ESG type or ESG compliant financial products, either which DBS itself originated or which you are selling on behalf of somebody else, does it, honestly speaking, right, well, what do they tell you? Look, Piyush, you can call it whatever you want. I've heard about this whole greenwashing thing. Even if it's just labeling and marketing, it's an ESG type product. As long as it gives me the type of returns that I expect or want, I don't really care. Is that too jaded? Is that too cynical? I mean, do clients, do investors really care?
Well, for me,
actually, I think increasingly, Martin, you're finding.
Piyush, go ahead.
Yeah, sure. Go ahead, Yimei.
Okay, Yimei, go ahead.
I think.
Well, I was just going to say that.
Thank you very much.
Ladies first,
You
please.
go first. You go first. You go first. I'm sorry.
It's getting very English. After you. No, please. After you.
All right.
Yimei,
why don't I go first? So I think, Martin, I'm finding at both ends of the spectrum, increasingly our individual and private banking customers are beginning to express a choice. It's not big, but impact investing, philanthropic investing is leading in turn to ESG investing. So a lot of customers are wanting to be able to express a choice in terms of the kind of investments they want to do. it's even more visible in the institutional investor space. As you think about large investors, sovereign wealth funds, long-only funds, many of them are articulating very clear policies about sectoral choices and the kinds of companies they want to put money into and the kinds of companies they don't want to put money into. So without a doubt, from an investor standpoint, we are seeing very clear expressions of interest. Now, the question to ask is actually the flip of what you said. Would our investors still give us money if the ESG opportunity gave you less than the market returns? That's not entirely clear. In many cases, people are happy to go ESG if they can get at least the same market return as a non-ESG investment. But it's not clear how many of them will be willing to take a compromise and go for a lower return product. That's still to be tested.
All right. Yimei, what do you say?
Yeah, I definitely think, well, people will want to have higher return, and that is the ultimate answer. But how to have the higher return is a different story. And I seriously do not think that ESG definitely result in lower return, because from our study and from our experience, I do think there are so many exciting things happening with the environmental change, with new technology that we can grasp instead of definitely investing the heavy polluted industry. So this is a not sacrifice, and we need to make that clear to the end clients that this is not a sacrifice. We can put the good money into the good behavior and good future, and in that way we can all win-win-win. So I do think that, yeah.
No, please finish your thought.
Yeah, I do think that if we try to educate the investor will get on board. So their money will be their vote for the better future.
Okay, yeah, voting with their money, understood. So we've been telling folks how there's a lot of engagement on our virtual platform here. This is a gentleman named Edmund Tan, who's inside our chat room right now. And he says the big issue on ESG is the G part, that is governance. Whose standards do these G come from, especially in the current environment and from certain jurisdictions? I'm not sure if this is a question or a comment, but the way that I'm thinking about it, when you talk about governance, and Piyush, weigh in on this. For decades now, for foreign investors, the perception, maybe it's borne out by statistics, by data, I haven't actually checked it, maybe I should, but the perception has been that a lot of Asian publicly listed companies that trade on stock exchanges are not necessarily run predominantly for the benefit of shareholders. I think you'd have to agree. How much improvement has there been in, let's say, the last 10, 15 years, and is it fast enough, do you think?
Well, definitely.
So, Martin, let me actually flip.
No,
okay,
I'm sorry,
we're clashing here. Yimei, no, please, ladies first.
Well, definitely, there have always been concern about the governance and how much the investors were valued in the management process. But I do believe that in the past, especially in China, in the past 12 or 10 years, I think the governance part really improved greatly. We have seen SOEs talking to their investors on a regular basis. We have seen that really top executives talking to general, small investors through various social medias and conferences. So we do believe that we have seen progress, and people are more and more valuing the investors, the audience thoughts and their values, and especially their ultimate investors' shareholding in the interest in the company. So we have seen changes in the Chinese companies.
Okay, but Piyush, is it enough progress for you?
Well, I'm
Martin,
optimistic.
I was going to go there.
I always want to see good changes. So there will be differences, especially for us. We think the governance issue, especially in real estate sector, probably could be harder and to give more higher attention. But different industry have different problems with governance and different hierarchies on how much weight we should assign to their governance issue.
Got it. Understood. Okay, Piyush, the progress we've seen in corporate governance, is it enough?
So, Martin, I was going to say, first of all, I think there is clear progress in corporate governance. I think there's still gaps in, many parts of Asia. However, I think the important thing is the root question. Is governance only about shareholders or governance about responsibility to other stakeholders? I think when you started off saying the Asian companies are not focused only on shareholders, frankly, the rest of the world is going there now. A recognition that as governance, you need to make sure that you have a responsibility to other communities, societies, taxpayers, etc., and various other constituencies. So I think this idea that it's only shareholder is also changing. I think the rubric is changing. And within that changing rubric, a lot of Asian companies actually don't do too badly.
Okay, fair enough. Listen, to both of you, thank you so much. It's been a pleasure talking. Appreciate the time very much. Piyush Gupta there, CEO of the DBS Group, and also Yimei Li, CEO of China Asset Management. And thank you to both of you.